Yo, what's up traders? Welcome to a new video. In this video I'll be showing you the best Heikin Ashi scalping strategy at the moment. Let's dive in. Alright, I'm going to test this strategy on the Euro USD pair, but you can also use this trading strategy for trading crypto or stocks. By the way, comment I subscribe so I can meet my subscribers. Alright, let's go back to the video. Over here, as you can see, the pair that I'm using right now is Euro USD, and I'm using the 5-minute time frame. So for this strategy we need 3 indicators. Let me show you. First we need the exponential moving average, and we click once on that. Then we use the smoothed Heikin candles by Edity, and we click also once on that. And last but not least, we use the supertrend by Heikin Ashi, and we also click on that. Next we are going to optimize these indicators. So we start with the exponential moving average, and we will be using a 200 length, which identifies the long-term trend. And yeah, you can play around with the colors. I use white, grayish, something like that. Over here, as you can see, it shows the trend direction, the main trend. Then we look at the smoothed Heikin Ashi candles, and we leave it on default. You can of course play around with the colors. If you would like to have green, you can use green. I just leave it on blue. And then we have the super trend, and make sure to adjust this and use a 50 ATR period and a ATR multiplier number 5. So that's important to change that. And as you can see, now we have 3 indicators displayed: the 200 exponential moving average for the long-term trend. We have the smoothed Heikin Ashi candles, and that also identifies a trend switch. And as you can see, it's really clear what the trend is. When we see blue candles, it means we're going to the upside. When we see red candles, it shows more bearish moves. So instead of over here we see a buy candle, then we see a red one, and then we see a buy, and yeah, there's too much noise. Over here we see it goes to the upside, but we also see red candles, but over here we see a nice move of blue candles to the upside. So all the noise is filtered. Same applies over here. We see a lot of red smoothed Heikin Ashi candles, but over here we see a buy, bullish candle, even an engulfing candle, and then we see a lot of red candles, but then we see a bullish candle, a doji. But yeah, it says it's red, so we're only looking for sell opportunities. And then last but not least, we have the super trend, and that also shows buy signals and sell signals, and like the name says, it also shows a trend. So now we have 3 indicators, and we are going to combine them in order to take our trades. Let me show you a nice buy example. Over here we see that the price is above the 200 exponential moving average, so we're only looking for buy opportunities right now. Then we also need the smoothed Heikin Ashi candles to be blue, right? That means bullish, so it means that the price needs to go up. And then last but not least, we're waiting on the super trend indicator that shows us a buy signal over here, as you can see. And then we place our stop loss on top of the buy signal of the super trend. Let me show you an example. So over here the buy signal appeared. We place our stop loss. And you can choose if you want to place it on top of the 200 exponential moving average or just on top of the super trend. It doesn't really matter that much, but yeah, still 1 pip. So yeah, that could be crucial. I'm not sure. And then you're aiming for a 1.5 to 1 risk reward ratio trade, which means that over here we place our TP. And then as you can see, this turned out to be a loser by not even 1 pip. That's, yeah, it's 1 pip. It's about 1 pip. But as you can see, if I place my stop loss on top of the 200 exponential moving average, then I also drag this down, and then our TP got hit, right? Just by 1 pip. So that's a nice example of what a difference 1 pip can make. But that's our example of a buy trade. Let me show you an example of a sell trade. Over here we see that the price is below the 200 exponential moving average. Then we also see our red candlesticks, the smoothed Heikin Ashi candlesticks. And we also see a sell signal over here. We place our sell order about here. And again, you can choose to place your stop loss on top of the 200 exponential moving average, or you can place it about here on the super trend. But over here, if you are looking for a 1.5 to 1 risk reward ratio, this turned out to be a winner as well. Let me show you more examples. Over here we are waiting for a 200 exponential moving average, and then we have blue smoothed Heikin Ashi candles. We also see a buy signal over here. We place our trade about here, and that, yeah, it turned out to be a loser because as you can see over here we got faked out. But if you decide to place your stop loss about here, we are still in the game, and then we are aiming for a 1.5 to 1 risk reward trade. And let's see how that turned out. And that was also a loser. So yeah, that happens, of course. We're not winning every single time. But in the meantime, we also saw a sell example over here. The price is below the 200 exponential moving average. We see red smoothed Heikin Ashi candles. We also see a sell signal over here. So we place our trade, let's say the stop loss on top of the 200 exponential moving average, then about here. As you can see, this was a nice winner. Then we see another trade over here. Yeah, it's a little bit hard to place your stop loss on top of the 200 exponential moving average because it's way too small, it's way too close. It's about 2 pips. I personally wouldn't take this trade, but let's say that you place your stop loss on top of the super trend indicator. We are aiming for a 1.5 to 1 risk reward ratio, which is about here. And that's turned out to be a winner, which is nice. We're waiting for a sell signal. If that happens, then we see a sell signal, but as you can see, the price is above the 200 exponential moving average, so we do not take the trade. Then we have a buy over here, and we also see it's blue. We see the buy, and we see it's above the 200 exponential moving average. We take the trade. We place our stop loss on top of the signal, or about here. Let's place it about here. We risk a 1.5 to 1 risk reward ratio. And then this one turned out to be a loser. Keep in mind that we are trading in the Asian session, which is not the best session to trade, to scalp. Let's show you some signals in the London session. We're trading in the London session right now. So this is the 200 exponential moving average. Then we have the smoothed Heikin Ashi. Alright, this is a nice example. We are trading below the 200 exponential moving average. We see bearish red Heikin Ashi candles, and we also see a sell signal. So we place our trade about here, our stop loss on top of the 200 exponential moving average, and we are aiming for a 1.5 to 1 risk reward trade. It hits our TP and then it went to the upside. So that is a nice example. Then we saw a buy opportunity as well. The price is above the 200 exponential moving average, but again, it's hard to place our stop loss on top of the 200 EMA if it's that close, but we can test it out and place our stop loss at the supertrend indicator. Risk reward ratio is 1.5 to 1, which is about here. Let's see what happens. So that is a long trade, and as you can see, it turned out to be consolidating. So you can decide if you want to close out the trade at break even, or yeah, of course you can just let it go, but normally I would just close out the trade because it didn't hit our TP the same day. Alright, this will be our last example. Over here we see that the sell signal appeared. We see a red Heikin Ashi candles. Then we also see that the price is below the 200 exponential moving average. All the confirmations have met. We place our trade. Then of course you can decide if you want to place it on top of the 200 exponential moving average or about here, which is more of a safe choice. Then we drag down our indicator and we use a 1.5 to 1 risk reward ratio, and then we let the trade go, and then it has hit our TP, which is nice, of course. So that is basically the strategy. Let me summarize it again. We have three indicators: the exponential moving average, the smoothed Heikin Ashi candles, and the super trend. First, we look at the 200 exponential moving average. To identify the trend, the price needs to be below the 200 exponential moving average. Then we look at the red candles, the red Heikin Ashi candles. The Heikin Ashi candles filter out the noise, and yeah, as you can see, it has to be red if we're taking a sell trade. And then last but not least, we're waiting for a sell confirmation of the super trend, and then we take the trade. We risk 1.5 to 1, and that is basically the strategy. You can use the strategy on every time frame, but if you would like to scalp, then the 5-minute time frame is really good. And you can use this trading strategy for crypto if you want to trade Bitcoin, or Forex pairs also work, and also stocks, but I recommend to use it for Forex and crypto. If you like this video, give it a thumbs up, subscribe, and if we hit 1000 likes, then I will test this trading strategy 150 times. I'll see you in the next video.